Let's start with Gary. We've had quite the week in the markets. On Monday, you described it as carnage, a full-blown rout, a clobbering. Things have bounced back a little bit since then, but what's going on, and what could be the fallout for Alberta?
Well, put it this way. It's so ugly, I am hiding our RRSP statements from my wife so she doesn't see them. It's all red ink. It's been pretty brutal, actually. Toronto's main index, main equity index, it was, I think, down to the tune of almost 11%, which in the markets is referred to as correction territory. If it drops 20% below the high, you're talking full-blown bear market. We're not there yet, but it's pretty ugly. Oil and gas has really led to the downside, is no surprise here in Alberta. Oil prices, as we speak, are around $48 a barrel, peaked last year at 107. We've had a raft of additional layoff announcements this week, Cenovus, Shell. This goes on and on. It's going to go on some more through the last half of the year. It's hitting consumers. TransUnion, one of the credit agencies or bureaus, put out a report this week predicting that there will be a big jump in delinquency levels, i.e. people who are not up to date on their loan repayments for everything from cars to credit cards, mortgages, you name it. So this is a tough patch, and we're going to go through tougher times in the next 6 months, and the markets are reflecting that. I looked at lumber this week, of all things. It was supposed to be one of the few bright lights in the Canadian economy. Guess what? It's not doing so great either. The lumber stocks are all selling off. Why is that? Because Canadian lumber companies are building and buying plants in the United States. They're offshoring or off-nationalizing their lumber production. And so we're not getting the kind of oomph that you usually get in a recovery, the job creation that you usually get in a recovery. Mills are closing in BC. They're not opening. So it's not just oil. Right across the economy right now, there are very few engines that are working. They're all sputtering. Manufacturing, forestry, oil and gas. Mining is in the tank. If you look at companies like Teck, their stock hasn't been this low in like 12 years. So it's very tough to see where this economy is going to go. Looking ahead, I wish I could sound more optimistic about it, but I think there are really significant global forces at play that are really hammering the Canadian economy from coast to coast.
Gary, I mean, when you were on talking about oil prices a couple of weeks ago, you talked about the impact of Saudi Arabian policies and Saudi Arabia trying to basically starve out North Dakota production. To what extent is this still being driven by Saudi policy, and to what extent has it become its own? You know, has it gotten so much momentum it's just running downhill on its own?
No, Saudis are huge players internationally and very influential. Now we've got the prospect of Iran coming back on the market, which is going to further add to the glut. On the U.S. side, production is peaking. There are signs that it's starting to decline in some areas of the shale oil plays in the U.S. This is a new era for oil prices, and costs are paramount. You know, you got to get your costs down or you can't survive. Some of these companies are going to go bust before this is over, I'm sure. So it's not a pretty time in Alberta. Yeah, I mean, there aren't any quick fixes. The quick fix is obviously laying people off, which is what they're doing. But aside from that, there really needs to be a really hard, thorough look at technological solutions, how to apply them. And I think as much as that has been under discussion for years and years and years, I frankly think the oil and gas companies have not really embraced it. For a bunch of reasons. I mean, they report quarter to quarter. They live in a short-term world, right? And if you're an engineer or you're a line operator or you're a finance guy for a publicly traded oil company, you know that, and you're reporting to your bosses and they report to the shareholders. So it's quarter to quarter. You don't want to invest in something that might pay off in 7 years after you're long gone. So there's that kind of logjam that has precluded the kind of technological innovation, or at least slowed it. And there's also a lot of really innovative junior companies that have some interesting stuff on the go, but they themselves have said that it's tough to get in the door with these big companies for those reasons, that they're reluctant to take on risk that could affect quarterly earnings, quarterly numbers, and now we're in this terrible rough patch. I think there's kind of a silver lining to the rough patch, and that is that I think finally these companies are going to be forced to face the fact that to compete and survive, they're going to have to do some innovative things. And there are, in fact, some people led by the former CEO of AIMCO who are informally, very quietly getting together and discussing some of these issues. There are academics involved. And I think they're trying to put it on the radar, and I think they're making a little bit of headway. Some doors are opening that perhaps were closed a couple of years ago. So knock on wood, maybe they'll make some progress.
I'll tell you, the other junior company that's going to have to innovate would be your Alberta NDP government, because, Joe Ceci gave an interview to the Calgary Sun this week in which he said, they're going to be steady as they go. They're going to live up to their commitments. They're not going to attack core services. This is going to be some very brutal times ahead. And none of this is Rachel Notley's fault. She's not meeting with Saudi oil sheikhs. She's not responsible for Obama's, entente with Iran. She's not responsible for any of the factors that are driving down oil prices, but she is going to carry the can if the economy here really goes into a tailspin. And especially, the NDP have made very firm commitments about where they are not cutting, and they've made very firm commitments about where they are raising taxes. And that plan might have worked a lot better when oil was at $107 a barrel. It is going to be some ugly waters for them ahead.